John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, looking good, Billy Ray, feeling good, Lewis. This is Larry Pesavento setting in for a traveling John Logan. Well, folks, to say we had a little bit of activity yesterday is probably the understatement of the year. I've posted into the Tiger Room today the work of Norm Winsky. We had Norm on, I believe, Wednesday, the day before we had the Mercury retrograde. We had him on May 19th when we had Mercury retrograde, so we're certainly going to have him on 4 times a year. I'm going to have him on a lot more than that because he's certainly got some really good astro things that are working pretty nicely. Yesterday's was an amazing one because it happened exactly at the Fed meeting, and if you'll take a look at that chart, you'll see that all of that action happened in 1 hour. And boy, I'll tell you, I'll share with you a couple of patterns here in just a little bit, but it was really a spectacular move up. I mean, it was just nothing but buying. It was just a total buying panic. It followed along pretty nicely, with the patterns that we look at. If we take a look at the just give me 1 second here to pull this up, and then I'll be okay. Give me a second. Oh dear, what have I done here? Here we go. I had so many things happening last night that it's been a relatively long evening here. But we want to take a look here at what happened during that time frame. And remember, this was all done within an hour. And you'll notice I've marked the 2 red arrows there. That was the original. If you remember, the market went from 2,000 all the way down to dropped 25 handles all the way down to 1976. From there, it rallied back up to 1998. Then it pulled back to a 38% retracement, and then it had the big run into the Mercury retrograde window there, which was 10 minutes. Excuse me, folks. And that got up to the 2012 area, I believe, was the high that it made, and then it gave it all back. And now we've gone below the lows of that. Once we go below 1938, if we do, in the December futures, that's going to be a very negative sign. Now, we're also looking at a potential weekly reversal in the stock indices. In fact, there were so many shooting star patterns yesterday that you just could not, you just wouldn't believe how many there were. They were just one right after another. And I don't understand why you don't have any sound. Testing 1, 2, 3. They say there's no sound. I should be sound. It must be somebody's. Okay. Okay, it's okay. Yeah, we're all right. It's okay. I hope. Did you miss anything? I mean, usually, I think he stopped to have some shirts and suits made. They don't wear suits in North Carolina, so we don't have to worry about that. But we're glad to have John back because he's really got some wonderful support resistant points using the Stottlemyre stuff that he's developed to an even greater degree. So that'll be really nice to have him back. But let's just get back and just talk a little bit about the shooting star patterns that we have. You should, Jim Twentyman's favorite quote is, defy human nature, do the work yourself. So you should really go in and look at the things that you're watching. And if you're looking, and if you see this shooting star pattern, you know that there's something that is wrong. Now, the opposite of a shooting star pattern is the hammer pattern. That's what we had in gold, when gold bottomed. And that's what gives the market. It just means the market is just completely either sold out on the downside or overbought on, sold. The buyers are gone on the upside. That's really, what it means. It's the most powerful of all the patterns that they have in candles. The hanging man is a good one too, but the shooting star is when the market goes up, makes a high, it closes on its low. The hammer is when it hammers down a bottom and closes on its high. So that's it. Now, I've had several requests last night. Believe it or not, everybody seemed to be up all night last night. And first of all, I wanted to answer one of them, and that is the DAX market, which didn't get to anticipate. Let's try participate in any of that rally yesterday. It just couldn't get out of its own way. And then today, you can see it gapped down very, very slightly, and at the 10,200 level, and then went down to the 1.618 expansion, which was a double bottom from the low on September 15th, and now you can see that it is broken down. Once we broke below that 10,900 level, 10,090 level, that pretty much told you that it looked like it wanted to, really accelerate to the downside. This makes a weekly reversal for the German DAX, and that's a very, very negative, very, very negative pattern. So we're facing that today. If we get the S&P down 30 handles, and if we get the NASDAQ down 50 handles, and we get the Dow Jones down 200 handles, we would have a weekly reversal in the U.S. stocks, and that would also be what I think would be a pretty negative scenario. Now, the question we had about several times yesterday was, just give me 1 second here if I can get these charts up. I've got so darn many of them that I can't. I wanted to just give me 1 second. What happened to it? Oh dear. Having a senior moment, boys and girls. Give me a second here. Okay. Oh, this is what I wanted to show. Hold on. This is the part of the picture that we're going to be seeing here over these next few days. We've got some really big astral things. These are just nothing more than number cycles, but these are the cycles that we're facing right now. We had the solar eclipse and new moon on the 14th. We had Mercury going retrograde yesterday on the 17th. And then on the 27th, we have the lunar eclipse and the full moon. And that one is going to be at perigee, whereas it's going to be where the Earth is as near as the the moon as it possibly gets. And so those are going to be some pretty wild times. So this will be, we're going to have some really, really big times. I don't know how much they're going to be, but we're going to start seeing these volatility, go bonkers. That's, that's, basically the, what I see happening. I mean, I don't see any way around it. It's just getting wilder and wilder. And what our esteemed leader Janet Yellen did yesterday, I just don't think that was very, very. I don't think those boys thought that through very well. It's okay to come out and say, look, yeah, the economy is okay, it's coming around, the employment's getting better, but for God's sake, don't tell them that there's some problems in China, for crying out loud. This is the Federal Reserve of the United States of America. It's not the Federal Reserve of the world. Of course they're worried about what happens in the world markets, but you don't scare the poop out of the people in the financial markets by saying something like that. That's my 2 cents worth, but I don't see why she did that. That's not just any, and as a matter of fact, that's where the whole problem really started. Was about 20 minutes after she was into her talk, that the problem really started to, started to come unglued. Otherwise, I don't think there would have been much of a reaction at all. But neither here nor there. God bless her. She's doing her best job she can. That's all I know. We've had some tremendous moves in the Australian dollar and also in the euro. All of those are very, very interesting. But I do want to bring to your attention here. Oh, by the way, I'm going to have Norm Winsky on my show in a half an hour, because Norm, he's he's been a friend for many years, but he's really good at what he does. And since he's nailed those last two highs, I think we ought to be able to talk to him again. Okay, we'll be right back after these words. Talk about the euro.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit tfnn.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting tfnn.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I'm back. This is Larry Pesavento sitting in for John Logan, who will probably be back on Monday. And he's traveling through Hong Kong, I believe, right now. So anyway, let's just talk about what really happened in those markets yesterday. I've posted into Tiger TV the three main indices, and if you'll take a look, you'll see the shooting star patterns on all these daily charts. And believe me, this is really a rare pattern, folks. And remember, this happened within an hour. The Fed, the market was moving up into the Fed time, but and exploded right afterwards. The first initial reaction was down, and then boom, it went straight up. But all this was done within an hour, and it's just really an amazing thing. So you have to pay attention to it. Shooting stars and hammers are the along with hanging men. Hanging man is nothing is same as a shooting star pretty much, but they are very, very indicative of major turns. And if you go back and look at the chart yourself and try to find them, they're real easy to see because you can see the body of the whole thing. It just looks like a really fine line, and then if you look at the candle part of it, it's just a little tiny wick at either the top or the bottom. We had the same thing happen on the 24th when we had the 1,000-point down move early in the morning when the NASDAQ was limit down. Then the market turned around and went up. Now, we've been expecting a top to come in sometime between the 14th and the 23rd. And that's a pretty wide band, but with the action yesterday, that would give us a pretty good indication that that's where we are. Now, my good friend Bill Ehrman out of Nashville, Tennessee, who is by far, hands down, the best timer I have ever met in my 55 years, had predicted that the high day of this rally would come in between the 17th and the 18th of this month. Now, he doesn't do any astrology at all. Everything he does is related to the numbers of sacred science, the square roots of numbers 1, 2, 3, 4, 5, and their reciprocals. And he is incredibly good at what he does. When he tells you a date is coming, you flat better listen to him because he knows what he's doing. And in fact, Norm Winsky also had that, and his was based primarily on the Mercury retrograde. So he had two different areas, to take a look at it. So, but we will have Norm Winsky on at the top of the hour to start the show because he's got some very interesting things. Now, the fact that we've had this particular move happening and we've had the big drop down, then we've had this 3-week rally that has occurred since August the 24th. And I really think if we get the Dow down more than 200 points today, that's going to be a weekly reversal. Frankly, I don't think he can do it, just because there'll be some bargain hunters coming in this morning early. We'll see, what the thing was going to be at the same time. But we hit some monster Fibonacci numbers yesterday in the S&P at that 20 level, and that's where the spot December spot September, which goes off the board today, got into that area. So it was really really spot on that it hit. And if you look at the cash S&P, it also did the same thing, as did the New York Stock Exchange Index. And so they were all, popping at the same time. The Dow Jones Industrials amazingly hit a perfect 50% retracement from the high that we made on May 19th, which was also a Mercury retrograde with the new moon. And the one we hit yesterday was a exact 50% retracement of that move once it got into that 16,700 level. And it gave up 300 points so fast that, there were actually no downticks on the way down. Well, very few on the way down. So it was a buying panic on the way up and a selling panic on the way down. And that's where you get your shooting star patterns to see now if this thing turns around and goes back up and makes new highs over yesterday, we're going to make new highs for the whole year. This is how big it's going to be. But we have quadruple witching hour today, where we have options, stock options. Everything is expiring today, so it's going to be a very interesting, day to say the least. But we're having tremendous volatility, no matter what. Now I've posted into the Tiger TV the chart of the German DAX index, and it showed how the market was holding very well after it opened up, and then it broke, and once it started down, it was going down. Part of the show today was not being I was having a sound problem, but we've since got that fixed, and then it seems to be working okay. Now the thing that we need to do now is we're going to go over to our friend Jim Flanagan over at the GAN. He's at GAN Educators. Jim is the best GAN man around, hands down. He's on the same class as Bill McLaren, who has retired. He lives down in Australia somewhere, and also Bryce Gilmore. Bryce Gilmore stands alone. I mean, there's he and Bill Ehrman, I think, would stand shoulder to shoulder together. But you want to hear something really ironic, folks? Bill Ehrman is 88 years old. He's not in the best of health. He lives in Nashville, of course. He's Harvard trained. He went to school, PhD in Harvard. I believe music is one of his PhDs, and he has never traded. All he has had is an interest in studying the market, and he's been studying it for years and years. But he told me, and maybe I shouldn't have said that. No, I know it's okay because I've talked to him about it before. At this stage in his life, he don't really care. But he's really developed a way of timing the market that is related to these numbers that we like. Now, the chart that you're seeing now is the GAN weekly. Let's take a look at this. This is the I've got the wrong chart up. This is the one for the commodity bear markets in commodities. This is the bear market in commodities from 1937 through 1961. That's not that we talked about that yesterday. The one that I wanted to show you was the one from to show you what these when bear markets start in stocks, where they usually, the percentage that they usually go to. And what we usually use, are the Fibonacci numbers of 618 and 786. And the first one we have is the 382. And that would take us, somewhere down around the 1938, I think, would be the 382. And that's the low that we had on Sunday night, where we started the move up. So those are the ones that we want to keep an eye on. Now, if this is correct, that this is a high day yesterday, we're going to see some people that are trapped. The other thing this happened over Friday. So people are going to come in on Monday, and if the market has reversed last week's action, and that means we'd have to get below 1938 in the S&P, which is going to be a really hard thing to do, in my opinion, then they would be looking at it. So they would come in on Monday. I'm talking about hedge funds and also the mutual funds, and they would not have any sell signals at all. And so the selling can come from, just about anywhere. If it does come, we'll have to, wait and see if this is going to be the case or not. Right now, we've got the S&P's trading down about 22 handles, Nasdaq's down about 48 handles, and that would bring the Dow down about 160 handles, and that should be pretty close to where we are. We've got gold up $21. We need to talk about the gold because we're setting right at the 786 retracement. In fact, we're getting ready to go above it right here. If you'll give me 1 second to take a look at this, and I'll be okay. Okay, let me take a look. There it is. There we go. There we go. So this is it. This is from yesterday when we talked about potential rallies in the gold. where we should be looking. And with the equal rally would have taken us up to 1228, but we went through there very, very quickly, and we've got all the way up to the 786 of the high from September 1st. So we could easily get up to the 1147 level, without any trouble at all, given the fact that the gold is acting, pretty nice. In fact, we just hit 1141 just a few minutes ago, so that's really close to the spot of where we're going to possibly run into some resistance in the gold. And then also the number in the silver was just a little bit higher than that. So the fact that this Fed stuff is going over and over again is really, I mean, her talking over and over again about the problems with China is really the thing that I really think that was not a good thing to do, because it is the Federal Reserve. Just reach in your wallet and pull out a $1 bill, and it'll say, United States Treasury, Federal Reserve note. And that's what it is. It's not a world note. It's not a world order thing. It's the Federal Reserve of the United States. My God, it's right there on Pennsylvania Boulevard in Washington, D.C. So that's my opinion. I don't think she should have said. She can think about it if she wants. She could mention it in passing, but she don't want to spend 15 minutes talking about it. She talked about emerging markets and all the other stuff. I realize we live in a financial world, but her job is to take care of us, not to take care of the rest of the world. And in fact, with their quantitative easing, they've only kept up with the big boys. They haven't kept up with the rest of the stuff. You know what I mean? That's the that's the main thing that you're looking at. The whole problem that the Fed is facing right here, and this comes from the Elliott Waves folks, is the fact that we have this tremendous amount of money supply that has been pumped in, inflated at 36% annually, over a 6-year period. That's a 400% increase. Back in the old days, if you were trading gold in the 60s or 70s, 80s, and early 70s and 80s, and you saw a figure like this, gold would be setting at the level for what am I calling about? Gold would be probably trading between $4,000 and $5,000 would be my guess. Now, we've had a question from one of our favorite folks, Mr. Z, out of Philadelphia, who was fortunate enough to get on some of that short side of the S&P yesterday. He's asking a question about the crude oil. Now, crude oil also, has had a good rally off of the bottom. We rallied, well over $10. 10% off the bottom, and we're setting at I believe we're going back down to test the $45 per barrel in oil. The reason that I say that is that we stopped near a 786 retracement yesterday within just around 30 pips in the oil. So that would tell us that we're probably getting ready, to back off a little bit in the oil market. The green markets have had a little bit, but basically, folks, the inflation, the deflation in all the commodities is still there. We've had rallies. I mean, this rally in gold and silver is not very much. I mean, silver's rallied pretty good, about $1.50 off the bottom. There was another one that Mr. Z alerted us about. We had a beautiful 1.27 expansion down there at 1385 in the silver. As a matter of fact, we were on the air the day that hit. And so this is an advantage of, listening to some of these folks, because there's some really smart people in TFNN, from our fearless leader, Tom O'Brien, all the way through, ending with me. So we've got some have some good information occasionally. Now, we have a trade setup that we've been watching for a long time, and that is in the live cattle market. And we want to be alert to this, because our good friend Rich Anderson from Anderson Capital Management, who has been busier than a one-armed paper hanger. I mean, I talk to Rich just about every day, and more than that now with Douglas passing away, but it's really been some really rocking and rolling with some of the position sizes that some of these hedge fund guys are doing. So it's going to be quite interesting to see what happens here. But the key today is to watch the close of the market, because if we close really badly today, right on the lows, go short. Because it's not going to gap up. If they got some people trapped, that's that pattern that we had stopping right at those fib points on a day of really strong astronomical and sacred number, what Bill Ehrman uses. I mean, that's a very, very important event. In fact, Bill Ehrman rates them from 1 through 10, and the only 10 I've watched him over the past 10 years. The only 10 that he's come up with was March the 9th of 2009. Okay, we're going to come back and talk a little bit about cattle here. 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. This coming Tuesday, September 22nd, Tom O'Brien will publish the 700th issue of his weekly newsletter, The Gold Report. It's amazing to think that Tom started his newsletter over 13 years ago when gold was trading under $300 an ounce. To celebrate the 700th issue, you can sign up right now at a 20% savings off the regular monthly price, and you can lock in that low rate for as long as you remain a subscriber. The Gold Report is Tom's weekly newsletter covering the gold market as well as a variety of gold mining equities. The Gold Report is published every Tuesday afternoon with a market update sent out to subscribers on Monday mornings. Tom will walk you through what's going on in the gold and metals market each week, as well as providing specific buy and sell recommendation on the mining equities themselves. Now is the perfect time to sign up for the Gold Report. The 700th issue is published Tuesday, and that's when this sale ends, so act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Okay, folks, we're going to change pace here a little bit and take a look at the cattle market, because it's completing a perfect Gartley pattern on the long-term charts. It's completing several ABCD patterns on the daily somewhere in this. We're in the top end of the buying band right now at 136 and change. I would prefer to buy it towards the end of the band, which would be down around 134 to 134 and a half to 135. So we'll see. See what's going on. But anyway, we'll just go from there with the cattle. But I wanted to end the show to talk to you about how the market closes today is extremely important, because we have the big move of the market from the shooting stars yesterday. We have potential for weekly reversals. That means if the market closes right near the low of the day on the indices, it has a strong probability of starting a major move down. And since we were up for 3 weeks, we could be down for 3 to 5 weeks, and that would put us into the window of where the Bradley model says we should bottom sometime in late October. So that's how I'm seeing it. Whether that's going to be the case or not, we'll just have to wait and see. So anyway, that's what we're looking at. We do have some activity going on, folks. Remember that the volatility that we talked about has only been running about 25% of what we had during 2008 and 2009. We put this chart. In fact, I should post this chart in again so that you can take a look at it and prove to yourself that this is really not even an unusual time as of yet. But like the man says, it's coming. So just buckle up and make sure that you plan your trades as well as you can. And believe me, there's going to be a lot more fireworks as near as we can tell. We have quadruple witching today, which is also going to skew the data, usually towards the end, but there's nothing you can do about that. It's just usually a small effect. Given the fact what the Federal Reserve talked about yesterday might make it a little bit more. And ironically, China was up last night, even after she bad-mouthed it. It still closed higher. The Nikkei was down, but China did remind. But that market is totally controlled by I believe, by the Chinese government, because of the way that they move it 5% at a time. I mean, that's equivalent to us moving 900 points in the Dow. And if we did that here, there would be an investigation somewhere. Well, they might do it eventually. Who knows? So that's what we're watching here this week. The key cycle probably did come in here on the 17th. And remember, we're going to have Norm Winsky on the top of the hour on my show to discuss a little bit about that Mercury and some of the astrology things that I wanted to ask him about. It'd be a short segment, but we'll have him on again when we have another key day, because he's batting 2 for 2 now. And you know that as soon as someone has a bad day, we never have him back on again. So we'll keep his feet to the fire. As long as he doesn't give us bad information, he'll be our regular guest. He'll get those big checks from me or TFNN. So the key: watch how the markets close today. If they close bad, it is bad. If they close good, it's not as bad, but it's still bad. The only thing that'll make it different is if it goes up and closes really strong. The Dow up about 150, then it would be a total reversal, and the shooting star has been shot out. 877-927-6648. Thank you for joining. We'll have John Logan back next week.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.